to market chart pattern. Here at the market chart pattern, we pick a market, we take a look at the chart, we find the patterns, and we try to decipher what those patterns are telling us, what the price is likely to do next. In today's video, we'll take a look at the gold market. We will also take a look at some gold miner stocks. Before we proceed further, the disclaimer. The video is only for educational informational purposes only, and it's not a financial advice. So let's take a look at the COMEX gold. In a video which I did last week, we had a look at the gold market, and we looked at XAU USD, so the forex gold, but the pattern is the same. So today we are looking at the COMEX gold. We had mentioned that 1867 was a critical level. So in fact, actually, the levels between 1867 and 1877, it's a critical zone, and gold must clear this with conviction in order to make its move higher. Before that, gold is likely to consolidate, and this is exactly what has transpired over the last few days. If you're interested in checking out how we arrive at these levels, I will paste a link to the video which was done last week, so that you can know exactly how what level we are talking about and how we arrived at this 1867 level, which is a very important level. So we will delve deeper into the daily chart, but today what I would like to do is actually look at gold at a much longer time frame. So we will take a look at the gold chart on a monthly basis, and then we will zoom out into we'll zoom in then into the daily chart. So here we have the chart of gold going back several years. Here we go back in 1970s actually. So then what we see is that gold actually made a bottom somewhere around 76. That's all the data which is available to me for the COMEX gold futures, so using TradingView. And then in 1980 it made a high, and ever since that it just kept on going down and made a low sometime in 1999 to 2000, here around that point. Okay, so there is something actually very interesting what happened between that time period. So of course gold went into a bear market after 1980, which lasted several years, and then gold actually made a very important pattern in the 2000s. Okay, so let's take, for example, we take this point as the point A, which was the lowest point observed in 1976, and obviously this is the high of 1980, and then we take a line segment of it, so we call it, let's say, AB, and then when we take this and then we project it from this point, which was reached sometime in 1999, we reach a point which is around 10,034, and that is the high which was reached during the March 2008, when the financial crisis was ongoing. And what gold did was gold made a retracement, and we'll talk about that. But what is really important to see is that gold made this ABCD structure, and it appears that it completed a cycle of ABCD around this point. Now when gold made this high back in March of 2008, it retraced down. So where did it retrace down to? So we take out our Fibonacci tool, and we just draw from the obvious low, to the high reached, and we switch on our 38.2% retracement, and what we see is that gold retraced down to this level. It did go below it, but it kind of fluctuated around this point, and then it began to rally again. So what is really important is that this 38.2% retracement is kind of a powerful indication of strong trending markets. And so what we are going to do is, so let's say that the low it reached back in September of 1999 or thereabouts. If we call that point A, and then the high in March of 2000 as point B, the low reached in October 2000 as point C, and we try to project it from point C. What we get is actually a level which is around 1485, but the gold price actually went much higher. So what we find is actually that this line segment, if we multiply that with 1.618, which is a Fibonacci expansion level, so it appears that this move actually extended to 1.618, and that level comes around 1953, and the high reached was about 1920. So there is a it didn't really reach that level, yes, fine, but it was close enough. And if you just do a percentage of I don't know how much, 23, 25 points, it's not going to be a lot in percentage terms. So that's a very interesting observation. And something also very interesting is that after that the gold made a high around here, so that's September of 2011. It goes into a sideways action, then the price tries to rally, but it's never really able to take out this 1800 level with conviction, and in fact the bear market then begins. What is something really interesting is that, so if we were to look at this time period of March 2008 till October 2008, what we see is we take this correction which took place as point A, B as a line segment, and then we try to project it from the high here. What we see is that there is a similarity here. The correction was pretty much around the same amplitude. Let me just put it back here. There we go. And once the price begins to move lower, perhaps it was an indication that a much deeper correction was on its way. And then this is the 38.2% Fibonacci retracement, and what we see is once the price broke down, then we had a prolonged bear move, which went on till December 2015. Now where did this move terminate actually? So the December 2015 move comes at the between 61.8% Fibonacci retracement of this line, and then 50% of this move from 1999 till 2008. So in between that, the price made its low, and then so we are looking at a monthly chart. Zooming out into daily time frames, shorter term time frames, there might be other patterns which we can use to identify. Perhaps we get closer to the levels where the price actually bottomed. So after this, something really interesting which happened. So what we see is that so price rallies, taking out this swing high out from December 2015 till July 2016, and then it retraces back to about 78.6% Fibonacci retracement of this move. So let me try drawing it. Around that point here, Then a price tries to make a move to try, is not able to take this high out. So for several months is trying it, but it's not able to take this out. Then what happens is that it makes a retracement, which is a perfect 78.6% retracement around here of this line of this move here. Let me draw again. So like this. And then something really interesting begins to happen. So what we see after that is, let me actually make it a little bit bigger. What we see is that after that, the retracements are actually shallow. So they seem to terminate around the 38.5, 38.2% retracement and 50% retracement of these moves. So this one was one. This one was exactly at 38.2% retracement. Here, this one is now where we are currently. It is a 38.2% retracement of this entire move. So this is why this 1690 level is really important for this move. So price should not go below that. That's really important. Also, what we see is that this blue line drawn is the correction which took place in May of sorry, in 2011. And if we copy this and we move it to here, hey Siri, go away. And what we see is that it coincides with this level here. So again, what it shows is that it's this level of 1689 or 1690 is very important. So price must hold that. And what we saw was that that price got down to this 38.2% retracement. It went higher. It tested the lows, rejected these lows, and began to move higher. So here we see how important these 38.2% retracements are when in strong trending markets. So let's assume that we are in this ABC cycle, and if a price is able to hold this, and then where could be the next target higher? So we get two projections. So if we take this low of 2008 and 2011, and we project it from this low of 2015 December, we get a level of 2278. So that's the kind of our first ABCD projection where the price could likely target. However, in a bigger cycle, it's also possible that once this level is cleared with conviction, there is a larger ABCD cycle going back to early 2000s, in fact it's late 1999, and that ABCD takes us to around 2715. So that's the kind of price which gold can target. Now what we'll do is we'll just zoom out and we'll go to the lower time frame, the daily chart. So here what is really important is that we have this ABCD structure as 788.6% retracement and 120.1.272 expansion of this BC segment coming here, and price has been consolidating here. So it's possible that price actually could pull back before making a move higher, and it's possible that it could move down to around 1830 level where there is this structural support. However, if it were to retrace this entire move, then we have this 38.2% retracement coming around 1796, so roughly about 1800 level. Also, if we draw, let's say for example, a line from here, trend line from here, it's possible that price could actually come down a little bit further to around 1775 before attempting to take this high out. Before price to move higher, it's really important that it takes this level of 1867 to 1877 out with conviction. on a closing basis, we'll need to see at least 2 days of closing prices for it to move higher. So that's about the gold. Let's take a look at some gold stocks. So what we can do is we can look at this Polymetal stock, which is traded on London Stock Exchange. And what we see is that it's also doing a ABCD structure. In fact, it was very close to it on Thursday, and then 61.8% retracement is coming at 1540. It's possible the stock will find some resistance around this level, and it needs to clear that. We can also take a look at this, another stock traded on London Stock Exchange. So this one is interesting because it seems to have formed a inverse head and shoulder pattern. So that's the head, and then that's the left shoulder and the right shoulder here. The interesting thing is that it's also symmetric in time. So if we just take this level and then the high which was formed here, we clone this and we project it from here, it comes around this base on the right shoulder side of things, and then it took this level out on Thursday, which was around 165, and on Friday it had a little bit of a retracement, which is obviously possible because it did an ABCD. So this one is also a very interesting stock to watch. Particularly, it seems to have formed this inverse head and shoulder pattern, and if the gold price is likely to move higher, this stock is obviously following that gold price, and we could have nice moves in this stock. Let's take a look at GDX. Okay, so GDX. So GDX is actually, traveling in an ABCD formation, and then we have the 61.8% retracement and the ABCD move between 35.8 and 36.1 level. Around this level, it's likely to find some resistance, so perhaps it could pull back. If it were to pull back, the kind of correction we should be looking at is kind of similar to what was there before. So around this level perhaps could be a possible place where it can retrace back to. And if we were to take a look at Fibonacci retracement, so around 61.8% retracement. We can also take a look at, let's see, NEM, the Newmont Mining. Yeah, so you can see that this stock has been actually trending lower, much like any other gold miners, and then it formed a bottom around here, this level. Price was not able to move lower, formed a double bottom, then a kind of a retest of this level to another double bottom. And what it seems to be doing now is it has completed an ABCD, or it's about to complete an ABCD formation. The 38.2% retracement came around 61 dollars per share. Ideally for this stock, for it to become stronger, it needs to clear this level, and then there's some structural resistance here as well. That would be a very positive sign if it's able to take this out, and taking out this swing high around $64-65 will be very positive. We'll see over the coming days and weeks how this will perform, but a stronger gold price will be beneficial for this stock. If we look at the Barrick has a stronger pattern in the sense that it took this swing high out with the conviction, and it has already done an ABCD structure, also 1.27 to expansion of this swing, and it's gone above the 38.2% retracement level, which is a good sign, also taking this swing high out. So if it's possible that it pulls back a little bit because of the ABCD completion, the next target could be, if the price were to move higher, around the 61.8% retracement level, which is 22.06, and also taking out this swing will be very positive, and we'll follow this stock over over the coming few days and weeks to see how it performed. But at the moment, it is at a resistance level because of the ABCD and this 1.27 Fibonacci expansion. So what we have looked at in this video is we looked at the gold market, and we explained that why gold is at such a critical level. 1867 to 1877 is the price level gold must clear in order to make a move higher. It's possible, well, we discussed this in the video. I'll post the link below last week, that gold is likely to consolidate around this, and this is what it's been doing. It's also possible that gold pulls back a little bit. So it's possible that gold perhaps pulls back by about $60 from this level, which would bring it down somewhere around here in this region. And then there is this rising trend line that's also kind of supportive of it. We also looked at monthly level chart of gold, and we looked at how 38.2% retracements have been strong, really working well in the strong trending markets, and why it's important that gold held that level of let me actually go back to, so gold must hold this 1690 level. So guys, I think that's all for now. Thank you very much for watching the video. If you enjoy my technical analysis, it's providing value for you, please do subscribe, and do not forget to hit that bell icon. This way you will know when new videos will be posted. And if you want something, a chart or a market to be analyzed, do post it in the comments, and I'll take a look, and we'll look at the patterns, what sort of patterns exist in that market and that chart. Thank you very much. Have a great day, night, evening. Speak to you soon. Stay strong. Bye.